Hi, Martin Turner here. This week we look at the statement of changes in equity and the cash flow statement and how the financial statements are interconnected.
Hi, Martin Turner here, and welcome to our Week 4 lecture for ACCT11059, Accounting, Learning and Online Communication. And we'll be continuing our topic of introducing financial statements. This week we're going to look at two financial statements, the statement of changes in equity and the cash flow statement. And then we'll have a minute paper. So we looked at the income statement and balance sheet last week, and this week we look at the statement of changes in equity and the cash flow statement. Now, the statement of changes in equity, again, there's no required format and no standard terms. What it shows are the various changes in equity over a period of time, usually a year. And just like the other financial statements, ours will be group or consolidated accounts. Again, every listed company I've ever known is more than one company. So Ryman Healthcare, which is the parent company in which you invest shares in that parent company if you buy them on the share market, it also owns a number of other subsidiary companies. And its accounts, just like everyone else's, is the consolidated accounts of the whole group. Now, here we've got the consolidated statement of changes in equity for Ryman Healthcare. Ryman Healthcare is for the year ended 31 March 2021. That's the latest annual reports. And it has last year's ones, which is at the top, and then the second half is this year's ones. Here we have the opening balance at the 1st of April 2020. That's the beginning of the year for the 2021 year. And then we have the closing balance at the 31st of March 2021. The opening balance is $2,300,977,000. And the closing balance is $2,829,216,000. So those two items are in the balance sheet, both for last year and this year. And what the statement of changes in equity shows, it shows how we've changed, how the balance sheet equity item has changed from the 2.3 billion to the 2.8 billion. So we show profit for the year, 423,061,000, plus the other comprehensive income for the year, 215,708,000. And you see how we're looking at the figures in the total column. We won't worry about the other columns, just the total column. And that gives the total comprehensive income for the year of 600. We've got the opening balance of equity of 2.3 billion and the closing balance of 2.8 billion. And the statement of changes in equity shows us how we got from the last year's balance sheet of 2.3 billion to this year's balance sheet of 2.8 billion, roughly 500 million, half a billion dollars more increase during the year. And we see the profit for the year is 423,061,000. Other comprehensive income for the year is 215,708,000. And that gives the total comprehensive income for the year 638,769. Then we have the treasury stock movement, 3,030,000. Treasury stock movement, that's where Ryman Healthcare has bought some of its own shares, $3 million worth. And it's bought them to hold on trust for employees in the employee share scheme that it has. So it's bought some of its own shares, and then it's the dividends paid to shareholders, 107,500,000. So they're both negative figures. And so and that brings you the balance of $2.8 billion. So you can see that what it's showing the various changes in equity from the profit, total comprehensive income, and also the transfers between the shareholders and the company itself. So that's what and then further up is the previous year figures. So that's the opening balance for the 2020 year. And you see how it says 1st of April 2019, that's the opening balance. It's not the heading for this area. This is the 2020 figures, because there's the closing balance. And this one here, this is the 2021 figures. And so we've got the 2 years of data. So that's how the statement of changes in equity looks. It's a little bit nerdy, it can look a little bit confusing at first, but and you just enter in the total column of those. So we had opening equity, the profit or loss and other comprehensive income, and then the transfers between the firm and its equity investors, such as dividends, share issues, or in this case, there was share buybacks, the treasury stock movement where the company bought back some of its shares, and then you get to the closing equity. Now, we don't show the revenue and expenses. Those transfers between the firm and its equity investors are not revenue or expenses. If we go back to our definition of revenue, when we looked at the 5 elements of accounting, revenue are increases in assets or decreases in liabilities of the firm that result in increases in equity. So increases of assets or decreases in liabilities of the firm that result in other than those relating to contributions from equity investors. So the transfers between a firm and its equity investors are excluded from revenue and also from expenses. So expenses are decreases in assets or increases in liabilities of the firm that result in decreases in equity. You should have memorized the 5 elements of accounting. You just write them down 40 times and occasional repetitions, you'll have them. There's only 5. You need to know proper definitions of the 5 elements of accounting. Expenses are decreases in assets or increases in liabilities of firm that result in decreases in equity. Now, paying a dividend of $107.5 million in cash will reduce an asset. That will decrease an asset called cash. And so it is a decrease in an asset and it results in a decrease in equity. Equity will reduce by $107.5 million. So it meets the definition of expense, except other than those relating to distributions to equity investors. So this is a distribution to equity investors, dividends, so they're not an expense. This is why, if you know the definition of expense, you can see that they don't meet it. So the statement of changes in equity is showing those transfers, such as dividends between a shareholder and the company. Expenses and revenue are changes in value, either increasing value or reducing value. Distributions like dividends between a firm and the shareholders are not changes in value. They're simply moving value from the firm to the owners in that case. So that's what's been shown in the statement of changes in equity. Now, the other one we're going to look at is the cash flow statement. So here's Ryman Healthcare's cash flow statement. And again, you see it's the consolidated statement of cash flows. So we're looking at at all of those items, and it shows the various operating activities, gives the net operating cash flows. There's the 2021 figures, has investing activities, those various cash flows, and then the finance activities, and then it has a net increase or decrease in cash and cash equivalents, which is the 400 million minus 800 million plus 400 million is roughly negative, or it is negative 14.2 million. Opening cash was 34.3 million, which leaves the closing cash balance of $20.1 million. So you can see the cash flow statement is the opening cash balance, which is the bank balances, money in the bank plus some actual cash that the firm might have, which was 34.3 million for Ryman Healthcare last year. And that's the cash in the balance sheet a year ago. So the cash flow statement starts with the cash in the balance sheet from a year ago. We then look at the cash inflows and outflows during the year. And then we got the closing cash balance, which for Ryman Healthcare was $20.1 million. And that's the cash in the latest balance sheet. So what the cash flow statement tells us is how we got from the opening cash balance, the cash in the balance sheet last year, to the cash in the balance sheet this year. And the way that Ryman Healthcare got there was operating cash flows of 413 million positive. Receipts from residents, 1,176 million. That was selling occupation rights to residents. So they got primarily nearly $1.2 billion. They had paid suppliers and employees $420 million. That was negative. They had payments to residents of $320 million. When people die or move into care, they get their amount they paid for occupation rights back, less 20%. Also, interest paid was money they paid on their interest. Net operating cash flows $400 million. Then the investing activities, you can see there's purchased property, plant and equipment, $219 million. That's some of their investments into their aged care facilities. Then you've got purchase of investment properties, $577 million. So you can see they're investing a lot of money, $844 million into basically property development activities. And then we have the financing activities. We can see that they got various details around that. You can see there's the dividend. They paid $107.5 million in cash. They issued some retail bonds and they got money in of $150 million. And it comes to $417 million. And what we do, we add up 413, take off 844, plus 417, and we get negative 14.2 million. That's the net increase or decrease in cash and cash equivalents during the year. We go to opening cash balance, 34 million, the cash in the balance sheet last year, and then we get the cash balance this year, 20.17. So this is giving us some insights, and there's a few little footnotes that give a bit further detail, or just one footnote. And so it gives us a better idea of what's happening with the cash. So even though the cash balances are relatively small, 20 million or 34 million, you can see there are huge, huge cash flows through the year. So that's the cash flow statement. You won't be entering your cash flow statement into your spreadsheet. You'll be entering in the income statement, balance sheet, and statement of changes in equity. Now we come to a very important point. These financial statements, the income statement, the balance sheet, the statement of changes in equity, and the cash flow statement, they are all interconnected. Once you see how they're interconnected, then you're understanding what accounting is. Once you start, it sort of starts to come into focus that they're interconnected, then you're understanding how accounting is put together. We know the fundamental accounting equation, you should have memorized it by now. Assets plus expenses equals equity plus revenue plus liabilities. If you haven't memorized it yet, just write it down a few times. 40 times. You could do it 8 times a day over 5 days, or you could just go cold turkey, write it out. And you can do a bit of it now. Assets plus expenses equals equity plus revenue plus liabilities. And I've just given you 2 repetitions of that. I'll give you another one. Assets plus expenses equals equity plus revenue plus liabilities. This is the business model that underlies accounting. Accounting only looks at these 5 elements, nothing else. Now, the balance sheet shows the assets, equity, and liabilities of our firms. And the expenses and revenue are shown in the income statement. So the balance sheet and income statement show us all the 5 elements of accounting. So all the 5 elements are covered. We saw the changes in equity shows us how equity changes from the last year's balance sheet to this year's balance sheet, showing us the profit and other comprehensive income and total comprehensive income, plus also the various transactions between the firm and its equity investors. And then we looked at the cash flow statement shows changes in cash, how we got from the cash balance in last year's balance sheet to the cash balance in this year's balance sheet. And the reason equity and cash get their own financial statements is because the shareholders are particularly interested in equity and how that might have changed. And also we're interested in how cash has changed, because running out of cash is the only way you can go broke in business. And so you might be accrual accounting looks at the economic substance of transactions, but we also need to keep an eye on the cash. So how are the financial statements interconnected? Well, over a period for a year, the income statement shows revenue less expenses equals net income or profit. The revenue and expenses are over a period, over a year. And that's what the income statement shows us. Now, at a point of time, at the end of the year, net income, that's the bottom line of the income statement, is transferred to equity at the end of the year. And equity, that's in the balance sheet. So you can see the income statement's connected to the balance sheet because we revenue minus expenses equals net income. And then that net income is transferred to equity. And then we start the next year with zero revenue and expenses, and all starts over again. But that balance, that bottom line of the income statement goes to equity at the end of each year, the balance sheet. Now, the statement of changes in equity shows changes in equity between two balance sheets, between last year's balance sheet and this year's balance sheet. So the statement of changes in equity is connected to the balance sheet. And this cash flow statement, it shows changes in cash, which is an asset, between two balance sheets, say over a period of a year. So the cash flow statement's connected to the balance sheet. So that's how everything is interconnected. Let's go on to Socrative now. And if you haven't already, click on the Socrative link in Moodle, go into Socrative and answer these two questions. What was the most important thing you learned today? You might say nothing at all, or whatever it is. And what questions remain unanswered? Here we go. Can you see that all right? Andrew at Mareeba, far north Queensland. G'day, Andrew. What was the most important thing you learned today? Let's have a look. Oh, actually, sorry, we've got a different order. Imogen in Melbourne. The most important thing you learned today was how the financial statements interconnect. This can be quite an eye-opening new thing to see how they're interconnected, and that'll be something you can think about quite a bit during the term. And as you get used to seeing how it all interconnects and how it flows through, you'll understand how accounting works. Derek said the same thing, the interconnecting nature of financial statements. Anita, net income is transferred to equity at the end of the year. That's right. Revenue and expenses are emptied out every year into profit or net income, and that's transferred to equity, and revenue expenses start from zero at the end of the year. And so they're temporary accounts just for the period. What they are, they're changes to equity that we put into the temporary accounts so we can calculate profit at the end of the year. And then we put into equity and start again with assets, liabilities, and equity are permanent accounts that go on forever. Opening and closing cash balance, Benicia. Yeah, so you can see in the cash flow statement, we start with the opening cash balance, close with the closing cash balance. Changes in equity between two balance sheets. Yeah, so that's what the change in equity is showing us. It's showing us how equity has changed between two balance sheets. So you can start to make sense of that financial statement. Sophia, nothing. Emma, full stop. Santosh, I learned about how liabilities and assets make a difference in the company. Shivam, I got to know about extended accounting equation. Make sure you've memorized the extended accounting equation. It's not that hard. Assets plus expenses equals equity plus revenue plus liabilities. What you do is write it down. If you write it down 40 times, you'll remember it. You'll get occasional repetitions, particularly those studying accounting, and you'll have it for life. You won't be able to forget it, even if you want to. You need to know the extended accounting equation. That's the basis for account. That's the model that accounting is based on. Cash is the main assets that's needed for a business. Well, see, Cash, you need a lot more than cash in a business, but without cash, you go broke. Ryman Healthcare only has $20 million cash in its balance sheet, and it has billions and billions of dollars of assets, all these retirement villages. So it has huge assets. Cash is a small part of their assets at any given time, but it's a key asset we want to keep track of because we need it to operate. We run out and we're finished, and that may be what you mean this year. So, importance of the balance sheet and income statement for a firm or a company. Yeah, so the balance sheet and income statements show us all the 5 elements of accounting. So they're central, and but they're all important. Statement of change in equity and cash flow statement are also important. But the balance sheet and income statement will give you all the 5 elements of accounting. And what are those 5 elements? Well, the fundamentals of accounting equation: assets plus expenses equals equity plus revenue plus liabilities. And the assets, equity, and liabilities are in the balance sheet, and the revenue and expenses are in the income statement. Misty, how to understand our financial statements better, and knowing that some companies only have one of each statement. Yeah, so there's no standard terms and formats, and there's quite a bit of choice. And so there are 5 financial statements: income statement, balance sheet, statement of changes in equity, and cash flow statement. There's those 4 financial statements, but income statement is quite often, as in Ryman Healthcare's case, you've got the income statement plus you've got the statement of comprehensive income. For some companies, they just combine those 2 into one and just call it a statement of comprehensive income, and it includes the income statement. And other firms like Ryman Healthcare have the income statement and the statement of comprehensive income. That's good. And so that's what we're doing here, where I'm introducing you to my friends, the financial statements, and they may become your friends as you get a little bit more familiar with them and realize they're not that scary. Patrick, the relationship between the financial statements. This is a key insight. Once you start to understand that, then you're understanding how accounting works. Tyler in Rockhampton, how the accounting equation, assets plus expenses equal equity plus revenue plus liability. See, Tyler got a turn of writing it out. She got one of the 40 in there. Very good. Assets plus expenses equals equity plus revenue plus liability. It can be understood more easily, by being broken down into the balance sheet and income statements so that the information is much clearer. Yes, the balance sheet is showing us the assets, equity, and liabilities, and it's giving us some details about them, various items in each of those categories, various assets Ryman Healthcare has, and liabilities and equity, and the same with revenue expenses in the income statements. So those items are broken down into more detail. It's also reinforcing that cash is king. Yes, cash is the Elvis Presley of assets. It's king because, especially as far as employees are concerned, I think Tyler must be an employee somewhere. We like to be paid in cash. So do the suppliers. So does the government when you're paying taxes. Everybody likes to be paid in cash. So you run out of cash, you're finished. But as long as you can keep cash flowing around, you're in business. So cash is sort of like the asset that is like the blood going around the system. So that's why we have the cash flow statement, so we can keep an eye. We don't want to run out of cash. Perhaps we'll have a look at chat. Okay, we'll do it off chat. I wish I had 20 million in cash. Yeah, 20 million, it's a fair bit. But Ryman Healthcare is spending expenses of $1 million a day in cash. So there's a lot of cash. Now, there'll be a number of people with questions around the assignment and catching up and so forth. There's lots of people just still coming into the country and got a bit caught up in different things, or for all sorts of reasons, some people can be behind. And so a real focus of the tutorials is going to be looking at those sorts of things. What questions remain unanswered? Many people were saying the most important things they've learned today is the interconnectedness of the financial statements, also understanding the fundamental accounting equation, seeing what the different financial statements contribute to us looking at the 5 elements. But what questions remain unanswered? Who'd like to ask a question?
Hi, Martin. It's Carolyn.
Hello, Carolyn. How are you going?
Good. How are you?
I'm well, thank you.
Just one that's burning on my mind. When you put up your work for peer review and you don't get any response or feedback, do you just submit your assignment as is anyway?
Well, you'll be submitting the feedback you give to other students. Do you know those peer feedback sheets?
Yes, I uploaded the PDF.
So you've given feedback to 3 other students or more. Have you done that?
Yeah, I uploaded it in draft form.
How did you give it to the other students?
I typed up an Acrobat document and I attached it in the discussion board.
And how did they see it?
When you go into the discussion board and it says, replies and so on.
How did the other students see it? You put it up on the in the Moodle forum.
Yes.
Yeah. But those students may or may not have seen it.
Right.
Yeah. Is that right? Are you connecting to anyone? Are you connecting to anyone in the unit, or are you working on your own?
I've been using the discussion forum. I find that's the best one. So where people are there and looking at their sites and so on.
So have you talked to individuals on that?
I've been sending messages and so on, but I haven't checked since last week.
And do they get back to you when you're talking to people on the forums?
Not since last week.
So you're not keen on using the unit Facebook page, is that right?
Not particularly, no.
No. So that's where most of the action's happening.
Oh, that's all right. Yeah, I can understand people use it. I'm not a fan.
That's all right. What you can do is you can set up a alias if you like. This is what I do on it actually. I've got an alias and I just use that. And so you can have multiple aliases in Facebook. But anyway, that's where a lot of it's going on. But what you need to do is however you do it, you can use it on the forum, but if you're connecting to some other students, you can share some of your draft work with them directly as well. But it doesn't matter. If you don't get any feedback from anyone, that's fine. You just submit the 3 that you came up with, and but you just lose the benefit of getting feedback on your work. But and that can happen. That can happen because some people might get feedback from 8 different students, and some students might get no feedback. It's not necessarily work through the 3. But what a lot of the students will be doing, and I think the Cairns students are an example of that, they're sharing the feedback with each other, so you'll get it. But your question is, when you submit your step 6, all you put in is the feedback you gave to other students, and then you can give some commentary. You might say, well, no one gave me any feedback, or you might say, I posted these up, but I'm not sure the students even saw them, or whatever it is, or whether they got back to you on the feedback you've given them. So you can just give a little commentary, just how you found it, but you'll get marked on the feedback you give to others.
Martin, I have a question.
Yeah.
Hi, it's Imogen. Do we have to post our assignment to get feedback, or if we don't, would we get marked down for not posting? Not our feedback giving to others, but our assignment to get feedback?
Well, you get marked on the assignments you submit, and so all the other things you're doing are not part of that. But what happens is, what you'll discover as we get into assignment 2 is the quality of the work you do in what we find all the time. The quality of the work people do in assignment 2, those who are interacting well with other students, they do better work in this session too, because what happens is you get stuck on different things. This is an introductory accounting unit and people don't know all sorts of things. And so you get stuck on things, but if you're talking to other people, everybody's got the same issues, you just got a different company, you can solve them really quickly. But if you're not really interacting well with other people, you get stuck. And then, the stuff you do, so the quality. So this is in business, in anything, the judgments we make are always better if we're talking to people and throwing around ideas. So, yeah, so your answer is no. You only get marked on what's in the assignment, you know, what you submit, and you don't have to give evidence of, you know, talking to people or anything like that. We're just marking what you give. Did that answer the question, or do you have a follow-on question, Imogen?
No, that answered. Thank you very much.
You sure? Yeah. The this unit's called Accounting, Learning and Online Communication. So we're looking to support you to develop further your skills in online communication and learning, as well as accounting. Just like you'll be developing certain skills in some other first year units, say essay writing. Or...
G'day, Martin. How you going?
Oh, hi. Who's this?
David.
Oh, hello, David. And where are you, David?
Tanham.
Sorry?
Tanham, over the pond from you.
Oh, that's right, of course. Yeah, Tanham. G'day, David.
Mate, just got a query just on my statements of changes in equity.
Yeah.
Why would a settlement of a loan be a positive rather than a negative?
The in your cash flow statement, you've got an item that says settlement of a loan. Is that a loan from your firm that's paid money to the bank, or is it the bank or somebody's borrowed money from you and is paying you the money?
I suppose I'd have to check the notes, wouldn't I, to find out the real answer.
Yeah. I mean, if you happen to have your balance sheet there, you can put it up on the screen.
Oh, I can't mix
No,
it.
it's better to do in the tutorial anyway, those sort of
Yeah,
things.
no worries. Happy days.
Yeah,
Thanks,
but the money, the negative number in the cash flow statement means cash is going out. And a positive means you're getting some cash in. So if you've got a negative number, that means cash is going out of the firm to somebody else. And but you know, we look at it. If you want to raise that sort of thing in the tutorial, we can look at all that. This is good because you're getting used to the financial statements, and so you're looking at items and you're asking, you know, what are they? That's good. It's good. What other questions would you like to ask? I can see one here in Socrative. Not 100% clear. This is from Anita. Not 100% clear about equity. Why does it need to be on the balance sheet? Well, equity, the fundamental accounting equation is assets. Well, equity equals assets less liabilities. And the full one is assets plus expenses equals equity plus revenue plus liabilities. So equity is one of the 5 elements of accounting. That's why it's in the balance sheet. And why is it one of the 5 elements of accounting? Why does accounting have this item called equity? The reason is accounting, it's the entity concept. Accounting views a firm as being separate to its owners. And what that means is everything a firm does affects, in terms of what accounting thinks, everything a firm does affects itself and its owners. So that's why we have double entry accounting. Each transaction or economic event will affect the firm, assets and liabilities, and the owner, equity. And so equity, so that's why we have equity. It's representing the impacts of what the firm does on the owners. Did that help a little bit, Anita, or do you want to ask a follow-up question?
It's much clearer now. Thank you.
Is it clear? That's good. Just keep asking these questions. This is an introductory accounting unit. You're just trying to get introduced to them. If you can understand some of these core concepts, you'll have a grounding in what accounting is about. And what might seem very confusing to most people, you know, you'll understand. Craigswell, we need last year's cash balance for the cash flow statement. What if the newly established firm won't have a last year's statement? How do we make the statement, sir? Yeah, that's right. If it's a brand new company, well, it starts on the 1st of April 2020, it'll have cash on that day. And that's when it starts. So you won't have so that'll be the opening balance for your coming year's cash flow statement. So when you start out, the day you start out, you will have some cash in the bank, and then you start having cash for the year, and then you get your cash flow statement. For a new firm, it'll only show 1 year's figures because it won't have a previous year's figures.
I'm just curious about that question, sir.
Yeah.
Because if I would establish any company, so I don't have any background history. So
Every firm starts one day.
yeah,
If Ryman Healthcare did, it was just sort of 30 years ago. Every firm starts one day. On that day, that's when its accounts start. So, and typically you put some cash into the business, don't you? Or you put some other assets into the business. And so that's the day it starts. And so it can't have a previous year in its first.
Thank you, sir.
Yeah, that's good. That's excellent. These are all good questions. Oh, I have a question from Brisbane. Yep. Here we go. I have a question. Lois didn't come last week to class. In your online tutorials, are they recorded so we don't have a disadvantage of not having tutor? We'll make a makeup class in Brisbane. Poor old Lois hasn't been well. But most unlike Lois, I've worked with Lois for 10 years. She's never missed a class. But you do have the online. So the online tutorials are there and the online lectures, of course. So you've got those, but we will make up. Lois, when she's well, she'll make up that class. And she'll be talking to you about that. And but you know, I'll need to talk to her. I just need to confirm that she'll be all right for this week. But we'll see how she is. And but yeah, you'll make a catch-up class for Brisbane, so you'll get the face-to-face class. But the online material is available to everybody. So the online tutorial, online lectures, you can look at that material. Well, thank you very much, everyone. And I look forward to keep working with you as we go through this period of introducing the financial statements. And we've got our tutorials as well later today. And I look forward to keep working with you. So thank you very much, everyone. Bye for now.